Yo, what up? Woke up here in Dallas. Today is Monday. The market opened. I traded last night. It went well. Caught about 70 pips more or less. But I wanted to show you guys this view because you can see the airport from my balcony over here. Anyways, so I'm gonna be on my way downstairs. I'm gonna find like a business center area so that I can sit down and give you guys some free game with trading. Right here in the lobby, 17th floor. So if you guys don't know, my name is Lee. I am a part-time gold trader. I like to travel and make money. So this is the fitness area. Sheesh. I have indoor and outdoor pool. I think today the main thing I want to talk about is just like how I prep myself and how I plan before the week starts. That's one thing, at least for me when I was first starting, was a little bit confusing because there's nothing like trading. There's nothing that you do growing up that is similar, that allows you to learn how to read a chart or understand like if the market conditions are good to be able to trade, or even just have like a routine. But yeah, that's what I want to really speak about today. So the most important thing about prepping is getting your mindset to the right place. I feel like for me, for my style of trading, it's very important, just because I played a lot of sports growing up, but having the proper mindset before going into a game, having just like that winner's mentality from the get-go already gives you an edge. I feel like trading is the same thing. Prepping yourself is just equally as important as like doing your homework before executing that trade. And what I mean about doing your homework is like, okay, do your own analysis. Why is it that you're aiming more towards bullish instead of bearish? Or why is it that you're looking at gold? Obviously, that's the instrument that I trade. I think it's gonna go up because the price has a 50-50 chance of going up or down. So right now I'm gonna go up. That's the same thing as gambling. You're spending time here, you're not like that. Prepping is equally as important. But the biggest thing that I normally do is like in the morning, I wake up, I open the charts, I put on music. For me, music is super, super, super important. It allows me to feel like in a good mood. If you want a reference, my go-to is either Central C, Gunna, some Future, just something that just motivates me, makes me feel a little bit more confident. Once I see more or less like the market, I stay on the daily time frame. For me, the daily time frame is something that gives me like a clear goal for that day. And once I see that, then I go to the kitchen, I let some time pass by, and I either am drinking my tea, I'm drinking some coffee, or having breakfast at the same time. Once I'm pretty much done eating my breakfast, I end up going back to my office, and I'm like, okay, it's game time. Let me see what's happening at the moment based on what volume is giving. And obviously, if there's news, I try to pay attention to the time that's actually gonna happen. So then that way I know I shouldn't be on the charts during that time, or I shouldn't have an open trade during that news. After I already made my decision, like, okay, this is what I'm mainly aiming for, I open up the 15-minute time frame, and then I draw my lines, and I right-click on TradingView. If you use TradingView to chart, that's what I use. I right-click on TradingView and I set my alerts. Once I set my alerts, there's nothing else for me to do. Like, I just wait. I already made my decision, made my homework, and then now I just have to wait to see price go into that zone. One thing that I also try to pay attention to is how the market is moving during the middle of the week. I like to go back and forth between like the weekly candle and the daily candle. The weekly candle for me is just more like to engage more information onto what I can expect. It's not just like, okay, I open up my charts and I just see what just happened that day and that's it. No, sometimes the higher time frame can help you out and show you what's being born. So sometimes I just go back and forth between the weekly time frame. I usually check it on Mondays, on Wednesdays, and then on Fridays. The way I determine my bias for the most part is paying attention to the daily time frame. The daily time frame for me is king. It's the one that pretty much indicates what direction I should be focused on. It doesn't always mean that I will follow it. It's very rare for a pair to just go in one direction, especially if you're a day trader like me. Most of my trades end up only being about a few hours long. If I know that within those few hours, price will go up and then go down, or go down and then go up, I need to be careful on understanding like, okay, what's the probability of by the time when I open this trade, what's the probability of it reversing on me or going against my idea? So that's why I try to stick with whatever the daily time frame kind of shows me. I use that to pretty much choose a direction in the first place. Once I choose my direction, then I'll go into the 4 hour, then the 1 hour to start drawing my ideas. I try to stay away from news. I'm not a news trader where they wait for the biggest catalyst to come out and they're like, oh, like this is where I'm gonna make my, the biggest profit because I've been following the economic news and whatnot. That's not me. I stick to just fundamentals. Support, resistance. I wanna see what price is doing. I wanna see what the overall sentiment of the day is, if there are more buyers, if there are more sellers. What's a good area where price tends to reject from? What's a good area where price tends to bounce from? What's a great psychological zone? Like that's what I usually stick with. A good time frame that I stick with for the most part, I'll give it to you in this order. For me, the daily time frame is the one that allows me to have the overall sentiment and idea for the day. What's my bias for that day? If I don't have my decision out of the daily time frame, then I move to the 4 hour. The 4 hour allows me to understand like, okay, is there a possibility where price is gonna be reversed? If I still can't decide, then I'll go into the 1 hour time frame. And I'm like, okay, it's been bearish for the past 6 hours in a row. Eventually it has to come back up. Where would that zone be? But me personally, I don't do well with the 30 minute, so I usually tend to skip it. It does have information just like any other time frame, but the one that works the best for me is a 15-minute time frame. Once I see like a full closure on a 15-minute time frame, it allows me to understand like, okay, I have a possible entry. Obviously, once price went into that zone that I had marked. Now that the 15-minute time frame closed in there, I have a possible way of opening up a trade, or just I have a higher chance for that idea to play out. I then go down to the 5-minute and I just wait for the most absolute best setup according to my plan. And I execute the trades in the 5-minute. If you've never really marked levels before, I keep it extremely simple to understand like what makes a good level. If it has more than 3 touches, it's a great level. If I can go back and see that price at some point rejected off of that one line, and then after it got crossed, it came back down and bounced off of that same line, and it crossed again, came back up, rejected, like it's giving me confirmation that it is a level where price tends to either resist from or have a support from. So that's as simple as it gets. It doesn't, for me, it doesn't need to be so complicated. So I tend to have a simple checklist that I follow. You can actually download it, it's underneath in the description. It's completely free, but this is what I tend to follow before I execute a trade. My thought process when a trade is going against me I feel like it's very common. I hate it. Obviously, no one likes to lose, but I'm more at peace knowing that I did the homework. If you really genuinely believe that idea before you decide to open up that trade, you're also okay with taking the risk. I think understanding and knowing how much you're risking even before you open up that trade is the biggest part about that. I think one mistake that most traders, they tend to make right before they're about to execute, they start to calculate and they like obsess over how much money they're about to make. That is the complete opposite of what you should do. If you focus on how much money you're willing to risk, everything else doesn't matter. Because if your idea is good and if your direction is correct, then your TP should still be your TP. The money is still gonna add up. As long as your account is adding, it doesn't matter if it's $10 at a time, $100 at a time, $1,000 at a time, whatever that number is, as long as it's adding, that's all that should matter. You need to understand what's happening in your trading career. Just like everywhere else. You go to school, you have a GPA. Your GPA is technically the percentage that allows the teachers, that allows the school to understand what kind of student you are, how well you're doing in your classes. Like at work, they literally have a number for you to see how much money you're bringing in. The more data that you have on yourself, the more you're able to execute and the more you're able to adjust in the future. So the biggest thing for me is just writing down, okay, how was I feeling that day? How was my sentiment? What was my initial idea? And was I right or was I wrong? And then once you were able to answer that, what did you do right? What did you do wrong based on all of that data? And that's pretty much it. I measure a good trade if I stuck to my plan.
I think that's the #1 thing. If I stuck to my plan, then that means I did everything right and I have now accurate data that I'm able to store for the future and then be able to adjust. But let's say if my initial thought was buys, I'm gonna be aiming for buys around this area, and then all of a sudden I saw a candle that rejected, and now all of a sudden I'm on sales. I don't have any accurate data that I can go back to and be like, okay, cool, yeah, that was the plan all along. It's like, no, that was not the plan all along. Like, that was a gamble. So let's say you're a new trader and you just found me online, and maybe you've been following my trades on Instagram or TikTok, wherever, and you want to get started. The biggest thing that I would say, like the biggest takeaway that you can do to implement this is the same thing that I was doing back then, is watch one tutorial video a day. That's it. One trading tutorial video a day. The more informed you will be based on like the career you're trying to choose, or at least the side hustle you're trying to choose, or this journey, I think you're better off understanding it before you even attempt it. Instead of scrolling on your phone and watching freaking brain rot TikToks, like pull up a video that teaches you how to chart, teaches you how to read candle, teaches you just like the most basic things that you need to know in order to be able to do this. That already puts you way ahead of the average person that just opens up a trading account, puts in a couple $100 and then says like, oh yeah, this doesn't work. Like, come on, let's be real. So that's pretty much it for this video. I just wanted to speak to you directly and give you my input and give you as much information as I could. And like I said before, I have this checklist that I put together. That's one of the easiest things that I follow still to this day. Is like, I literally open up my phone, I have it here on my phone at all times, just like, okay, this is my idea. Does it check this off? Does it have this? Does it have this? Like, it's a simple cookie cutter thing that I made, so then that way I don't have to do as much thinking. But overall, if you appreciate this video and if this was helpful to you, don't forget to like and subscribe. I would really appreciate it. And if you have a particular question, just ask me right now on the comments, and as soon as I get a chance, I'll go ahead and reply back to you. But I appreciate it. Thank you.